I think we should probably get started in the interest of time. My name is Jennifer Camano, and I am the Planned Giving Director for Arizona Foundation for Women. And I want to thank you for joining us today. The Arizona Foundation for Women's Financial Independence seminars bring you information from experts in estate and financial planning, elder law, accounting, and philanthropic giving. These people can help you make critical financial decisions that affect you, your business, your family, and your community. Today's topic, Best Financial Habits, Financial Planning 101, will be presented by members of our Professional Advisors Committee, or our PAC. Our PAC really helps us present a series that is useful to men and women alike of all ages and abilities and so on. Today's presentation is sponsored by National Bank of Arizona, whose support means so much to us. Thank you, NBAZ. A recent study ranked Arizona the 4th worst state for women's equality, 18th for the gap between female and male executive pay, but 43rd for gap between male and female advanced degree holders, meaning a lot of women in our state have advanced degrees, but they're not making up for it in executive pay. 47th for women's rights and 50th for the disparities between men's and women's unemployment rates. In Arizona, 1 in 2 single mother families receive some form of public assistance. And that was all prior to COVID. Since early 2020, AFW has fielded numerous calls from individuals, small businesses, and nonprofits seeking emergency funds specifically for women in crisis. Women have been disproportionately affected by the pandemic, with millions more women leaving the workforce than men. Often it's due to child and elderly care responsibilities that fall to them, or they lack leadership roles and maybe instead hold hourly service-oriented positions. Both dilemmas make them more vulnerable to layoffs and furloughs. In addition, last year in April, right after COVID hit, the City of Phoenix Police Department saw a 140% increase in domestic violence deaths over 2019 at the same time. The quarantine and lockdown measures forced many women to stay home with their abuser, while shelter availability has been severely restricted. As AFW has adapted to changes over time, we have never experienced anything like the past year. In response to how the pandemic has unduly impacted women, AFW is working to create rapid response opportunities to help women survive and thrive. Highlights of our last year include: we published a 2020 Status of Women in Arizona research report. We graduated our first class of women from our new leadership development program, She Leads. This class raised over $68,000 to support AFW and other women's nonprofits. We host She Talks, a public program addressing critical issues affecting women. This Professional Advisors Committee, or PAC, hosts financial independence seminars free to the public. We began a new statewide mission-focused membership campaign so that anyone who cares about women can collectively create positive and systemic change for the betterment of women. We launched a new young professionals group. And with the help of our She Leads class and our endowment earnings, AFW granted out $74,000 to help support small grassroots women's organizations, providing critical services to women in the areas of safety, health, and economic empowerment. If you have clients or friends, anyone on this call who are interested in helping Arizona's women, please feel free to find us online at azfw.org. And now I would like to welcome a special guest and one of our grant recipients, Erin Moad, Development Director from Live and Learn. Live and Learn's mission is to empower women to break the cycle of generational poverty through personalized education for women, career guidance, job training, mentoring, and financial assistance. We're going to hear a little bit from Erin and their program, and then we will start our presentation, and I will introduce our speakers. Thank you, Erin.
Well, good afternoon. My name is Erin, and I'm the Development Director for Live and Learn. And I really am very pleased to be here this afternoon to share a bit with you about our organization. As Jennifer said, Live and Learn was founded by the Arizona Foundation for Women 9 years ago now. And AFW continues to provide financial support through annual grants to Live and Learn. I honestly think Live and Learn is an amazing testament to AFW's deep commitment to championing women's financial independence. So the story goes that AFW started Live and Learn because they found that 35% of mothers in Maricopa County were living in poverty. And yet many of these women were not being reached at all by nonprofit services, or the services that were reaching them were simply not enough to help these women get out of poverty and reach financial self-sufficiency. So maybe women were getting temporary housing or a food box or some rental assistance, maybe some career training, but it was piecemeal. And that is simply not an effective way to help anyone, let alone single mothers and domestic violence survivors, rise out of poverty and become financially stable. So AFW started Live and Learn to solve that problem, to make sure that women in Arizona living in poverty could attain a better life on their own terms and reach their full potential. Live and Learn's mission is to empower women to break the cycle of generational poverty. And each year we work with about 150 adult women from throughout Maricopa County whose entire lives have been shaped by poverty, homelessness, and violence. We work with women who have experienced domestic violence, sex trafficking. We see a lot of untreated mental illness, substance use disorder. Most of the women are single mothers, and they're really barely making ends meet. We see many multiple families living in very tight quarters, women with no safe childcare options, so young children watching younger children, or children simply left alone, especially in the past year with COVID. And what are you supposed to do if working more hours disqualifies you from government assistance, but also doesn't give you enough to pay for your family's groceries? What are you supposed to do if school is out for the summer and the only available safe childcare would be 3/4 of your paycheck? We see every day women who are really limited by their economic status, no optimism about their own future or their children's futures. We see women with incredible potential, but no path forward. So at the core of Live and Learn's mission is the belief that every woman deserves the opportunity to be financially self-sufficient, to be autonomous, and to reach her potential in life. Women are in our program for 2 years, during which time they receive highly individualized education and career coaching, financial literacy education that evolves as they progress, mentoring that focuses on life skills development, and accessing comprehensive healthcare. And something I think is very important to point out is how incredibly hard women work during these 2 years. All those stereotypes about people in poverty is just no. These are incredibly hardworking women. While in the program, they're meeting a few times a month with their Live and Learn client coordinator. They're attending monthly workshops on financial literacy, budgeting, life skills. They're accessing healthcare. They're working full time. They're caring for their children, again, mostly single mothers, and they're going to school on top of it all. And the women want this opportunity. We have 200 women on our wait list right now, ready to do the hard work if they can get the chance. But I'm happy to report that when women do get that opportunity, their hard work pays off. So since we were founded in 2012, 80% of women enrolled in Live and Learn's program have successfully completed it, meaning that they have risen off of government assistance, they have secured stable employment with a good wage, and they've earned a post-secondary degree or certification in a field with high local employment demand. So the ultimate goal of this really intense program is for women to stabilize and secure livable wage employment, and then to reach sustainable long-term financial self-sufficiency. And we've seen more than ever how imperative that is in the past year with the pandemic. Marissa, for example, is currently a Live and Learn client. She and her husband were pretty much scraping by, living paycheck to paycheck off of her husband's job. They lived in Maryville in a very small 2-bedroom apartment, and that was before the pandemic. So when the pandemic struck, their girls were doing school from home, and Marissa had to stop her side jobs that she did as cleaning houses and babysitting. The family had no savings. And then in April, her husband caught COVID and lost his job. So by June, the family was homeless. They were recovering from COVID, but Marissa lost her mother and her brother to COVID. And Marissa slipped into what she has later reflected and called a very deep depression. She began drinking again for the first time in 20 years. She was a recovered alcoholic. So that's when Marissa's cousin, who is a Live and Learn alumna, referred her to us. Right away, we helped the family get housing at UMOM, a Phoenix area, very large housing agency. And once the family was housed and secure, Live and Learn helped Marissa get the counseling she needed. It took her a few months, but then she was ready to start her job search. So Live and Learn helped her through a certification program, and then she secured a job, a full-time IT job. Starting pay was $23 an hour with benefits. So it was more than her husband was making before the pandemic, and it was the first time this family had ever had employer benefits. And Live and Learn continues to stay with Marissa. She's kept her job for 6 months now. Her family has moved into their own apartment again. Marissa is building a savings account, and she's planning to start community college this coming fall so that she can advance her career in education even further. I think Marissa is an amazing example of the importance of women's financial self-sufficiency and empowerment. We really see every day, and I'm sure my audience here today shares this understanding that women will do whatever it takes to keep their families stable and give their kids a better future. They just need the opportunity. And Live and Learn gives that opportunity to women in Maricopa County. With its legacy of Live and Learn, AFW has truly directly made a difference in so many through its commitment to women's financial independence over almost 10 years, almost our 10-year anniversary. Feel free to reach out to me with any questions. You can see my contact information there, and thank you.
Thank you, Erin. I've asked Erin to present so many times now. Really appreciate it. If anyone has any questions for Erin, well, there we go. How about that, everyone? You know what it's like to work via Zoom. I'm so sorry. Hopefully that will simmer down. All right, so before I hand it off entirely to my friends here, I would like to introduce them. Both Creighton and Justin are members of our Professional Advisors Committee. Creighton is a financial advisor with Northwestern Mutual. He and his team of 4 have a combined 20 years experience in the financial services industry. He works with a national network comprised of some of the best wealth advisors Northwestern Mutual has to offer. Creighton's team specializes in working closely with top financial professionals, closely held business owners, and executives who, over the course of building wealth while working, appreciate the expertise and focus they have on a few key areas: core capital preservation, tax optimization strategies, charitable gifting, and retirement distribution. We appreciate the charitable gifting component of that. Justin is a certified financial advisor and certified financial planner for Savant Wealth Management. Justin specializes in tax-smart retirement planning. He's been involved in the financial services industry since 2005. Prior to joining Savant, he was a partner and portfolio manager for an independent registered investment advisor firm in Chicago. Justin earned a Bachelor of Business Administration with a concentration in finance from the University of Michigan. And he's a frequent speaker on topics of tax-smart retirement planning, tax-smart philanthropy, and Social Security planning. Welcome. I'm going to turn my camera off and you guys take it away. Again, you guys, to the audience, please put questions in the chat and we'll, or in the Q&A, please. And we'll get to those at the end. Thank you.
Thanks, Jennifer. And thank you, Aaron. I always love hearing those case studies from Live and Learn. So today we're going to cover some of the best financial habits. We're really calling this Financial Planning 101. No matter where you're at in your financial life, we hope there's some actionable takeaways that you're going to get from today. And we're going to cover 5 key areas. And those are saving, spending, growing, protecting, and giving. And again, we want you to walk away with actionable strategies, no matter where you're at in your life, so that you can help improve your financial position. And you may think that financial planning is mostly math, but it's really more psychology than math when you really get down to it. And what we're going to be talking about are ways to make it simpler for yourself, make it automatic, make it painless, make it easy. So we're going to get started talking through these 5 areas. We have a number of poll questions as well that we're going to ask. So the first fundamental that we're talking about is saving. Saving for your needs, saving for your goals, and saving for surprises that will inevitably pop up. So let's start with our first poll question. What do you believe, what percentage of your monthly income should you be saving? Go ahead and answer that. And then we have a follow-up question, which is, what percentage of your monthly income are you actually saving? Now, this isn't meant to be a gotcha question, but it's very normal for us to see a disconnect here. And that's because saving's hard. It's a challenge to save every month and stay at those benchmark levels that you want, that you need to do to succeed. So I think we're going to wrap up our poll in just a second here, and then Creighton's going to talk about some of the ways that we can, again, automate saving, simplify savings, so that we set ourselves up for success and meeting our goals. So here's our first poll results. So it looks like our overwhelming answer for what should you be saving each month, about 2/3 of us answered 10 to 20%. And then what percentage are we actually saving? About 1/3 we're saving 0 to 5%, 10% in the 5 to 10 range, 10 to 20%, again, the most popular answer there, and then a handful going over 20% per month. So overall, good job. And again, we want to show you ways that if you're in a position to be able to improve that, ways that you can do that automatically and make it simple. So I'm going to hand it over now to Creighton.
Well, thank you, Justin, and Creighton here. But as Justin and I were preparing this presentation and thinking about what we wanted to talk about, I think one thing that's just so relevant is most people we talk to, while they may not be, saving at all, or maybe they are a little bit here and there, the most often strategy that we come across in our practice is a lot of people will spend first, pay their bills, and then save whatever's left over. And I think because of that, if we kind of flip it on its head and we turn savings into a bill, and what I mean by that is pay yourself first, and 20% I think is a good earmark, if you will. It's all going to depend on what your goals are, what the short, mid, and long-term things are that you want to do. But 20% allows you to have enough to build up for, emergency savings, some of the shorter term goals, and then also building up towards your financial freedom date or your retirement date. So one thing a lot of our clients will do just, to save money is they'll open up a separate savings account at their bank that they're not, actively using. And they have a portion of their direct deposit go directly there because what we find most often is the majority of our clients' wealth is in their 401k and their the equity in their home. And I think that's because those things are done automatically for you. So as we work with clients, we want to make sure that we're saving and investing by design rather than by default. And so we've kind of listed out these different buckets, so to speak, of depending on what it is that your goals are and what it is you're trying to do, making sure each dollar has a job description. So, a good rule of thumb, because when you invest in the market or put your money anywhere else, it comes with volatility, right? And everything has a cost. And quite frankly, the market, when you invest in the market, it comes with ups and downs. So we want anything that you plan on using in the next 2 years, and any kind of emergency fund, what have you, in a savings account, a money market, cash or checking account. Anything over that, 2-year mark, that's where we would, not to get too specific, but we're really, investing in various different financial instruments, different stocks, mutual funds, ETFs, bonds, anything 10 years or more out, we want to make sure are in more tax deferred buckets, but prior to retirement. So property, and, if you have a permanent life insurance product, now keep in mind, with permanent life insurance, the primary purpose of any life insurance product is going to be the death benefit. And then after 59 and a half, you want to make sure you're putting as much as you can into company-sponsored 401ks, IRAs, or individual retirement accounts, different annuities, or Roth IRAs, which are just a tax shelter for some of those investment vehicles.
All right. So Creighton, thanks. That was a great overview of kind of some of our options that are on the table when we're thinking about how to save. And then that brings us to the next fundamental, which is spending. And we kind of alluded to this up front. You need to have a plan and you need to be deliberate with your spending, because this is where you enable yourself to succeed with those other fundamentals. If you don't have a plan for your spending, the rest of everything else can fall apart. Like Creighton says, every dollar needs to have a job description. So let's start with this whole question, which is, what do you do when that paycheck comes in? There's kind of two broad ways we can look at it. Do you pay all of your bills and then just spend whatever's left? Or do you pay yourself first? Maybe automating your savings and your investing, and then spend what's left over. So we'll let everyone answer their questions and pop up the results in just a moment here.
So some people may do both.
Yep.
Just thinking.
And as we wait, I think I'm going to hand it over to Creighton, and then Creighton's going to talk about some of the ways that we can go about managing our expenses and keeping track of everything. So here's our poll results. Excellent job, everybody. We've got the majority of the people here today are setting up automations, paying themselves first, automatically saving and investing, probably with things like a employer retirement account, and then spending what's left. And that's really the best way to design it, so that you can, again, make a healthy financial habit.
Yeah, I think we gave that one away, but beforehand. But speaking of when it comes to spending, I think it really is important to use the technology that's available today. I mean, most banks will have, categories of where your money is going. So that way you can really track the behaviors, as Justin already alluded to, right? Most financial decisions aren't even so much math-based. It's really about behavior and about making sure you're doing the right things, if you will. And so if you have a good idea, again, back to the every dollar having a job description, what's coming in, what's going out. And then, also just to keep in mind, sometimes whether it be, car insurance or, one large, I know in Arizona, it's really expensive to renew your title. From Georgia originally, and auto renewals were like $60 a year. And I think depending on where you're at, where your budget's at, just make sure you're kind of knowing what's ahead, right? So I think, going back to having systems in place, right? If you can automate all of your cash flow, and again, this is more of a principle and, something to base what you're doing off of, but if 20% is going towards saving and investing, direct depositing where it needs to go, 60% is going towards the essential expenses, housing, food, minimum payments on debt, taxes, insurance, etc. And then don't forget to account for some of the fun expenses, right? Whether that be for entertainment, clothes, personal care, things of that nature. One thing I do personally is I send myself, a budgeted amount every week, because I always tell clients, if I didn't have this job, I'd be broke, because naturally I'm a spender. I like to spend money. So I think by setting up, not just automatically saving, but giving myself permission helps remove a lot of the guilt when it feels like, oh, I made a big purchase or I didn't, or what have you. It just helps alleviate some of the stress that otherwise, could exist. So.
Excellent. Thanks, Creighton. So that brings us to our next topic, which is growing. So we want to, once we start putting dollars away, we want them to be able to grow. And there's a number of different ways we can do that. We kind of saw that in the savings slide, but the employer-sponsored retirement plan is the most popular way to do this, and it makes good sense. So this is your traditional 401k, your 403b, and the like. So let's start with another poll question. How much are you setting aside in your employer-sponsored retirement accounts? 0%, 0 to 5, 5 to 15, or 15 plus. We'll plug those in. And this is really critical because the employer-sponsored retirement plan gives you a couple really distinct advantages. One is immediate tax savings, so that every dollar you put in, that is going to reduce your tax bill, and your paycheck will not go down by that full dollar. It might only go down by 70 or 80 cents. So you get more bang for your buck there, and you can also get more bang for your buck by capturing an employer match or profit sharing type of contribution. So we're going to wait for our poll results to come in. All right, so 3/4 of us are in that 5% to 15% bucket. Nobody in the 0%, which is excellent. I mean, most likely everybody's at least capturing the free money that's there from the employee match. So that's great. And now Creighton's going to talk about the importance of starting early and the impact that can make.
Yeah, I think there's the eighth wonder of the world is time and compound interest, right? So this little chart assumes you're setting money away. It's going to grow by 7% year over year. And depending on how early you start, if you're 25 to get to $1 million by the time you're 65, you only need to put away $381 a month. If you start 10 years later, I mean, it's almost 450. I don't do math in public, but about $450 more dollars every month for missing those 10 years. And then, the story continues from 45 until, when you're at 55, for you to accumulate $1 million, this is the only area when you've lost all that time in compounding that you actually have more dollars you contributed than what actually grew for you, right? So I think that's why it's important to automate some of these things, and also at the end of the day, the market's going to do what it's going to do, right? So as long as you let it ride and kind of go in with a strategy, go in with an approach, same with saving, you're that much better. And so now that we've kind of covered growing wealth, saving wealth, and spending your monies, Justin's going to walk through a quick little case study here. Taking an individual who's able to set aside some money with those employer-sponsored accounts. I'll let you take away.
Yeah. So again, we wanted to provide actionable advice, and when I talk to folks, you'd be surprised. The 401k usually gets utilized. I think as a whole, our country's been pretty well educated about the 401k, the advantages of that, and the employer match. So like we saw in our poll question, most people are taking advantage and getting that employer match. But if you're not, that's a great way to get started, because again, it's automated, there's some tax benefits, and you can get some cash from your employer as well. There's a couple other programs that are widely available, but not nearly as widely used. So the first one of those is the health savings account. This is a great way to, again, save and set aside money for healthcare expenses. We know those are all unpredictable and inevitable. So this is a great way to put money away tax-free, that you get a deduction for putting money in your HSA. And then when you take it out for eligible expenses for healthcare, you don't have to pay taxes. So truly tax-free dollars, and it helps you avoid some of those budget busting bills that might come from unexpected healthcare needs. And the last one that I see is really underutilized is the dependent care flex spending account. So this is where, again, you can put away pre-tax dollars to spend money on childcare. If you're already spending money on childcare, this is really a no-brainer to fund this account, because it allows you to automatically take some money out of your paycheck, tax-free, put it into this flex spending account, and then reimburse yourself or directly pay your childcare provider. So you can get a substantial amount of tax savings from that flex spending account. And to kind of put this all in perspective, this is where I think this is a great place to get started for people. Let's say we have a working mom earning $50,000 to $75,000 a year. They could get $500 or more each month in total benefits from these programs, in terms of dollars set aside, employer match, tax savings, $500 of total benefits. And it would only really cost them $100 net. So it's an incredible bang for your buck if you're strategic and utilize some of these tax advantaged employer provided programs. And then that moves us along to protection. And this is really important too, because once you start saving and growing, you want to protect what you have. And it's also important to protect your earning potential. So we're going to talk about all those things. But very first, you need to start simple and protect yourself with an emergency fund. We saw in our Live and Learn case study, not having an emergency fund, when a disaster strikes, an emergency strikes, it can put you off the rails. So we really think that is the fundamental starting point. So another poll question here: how many months do you have in an emergency fund? 0 or 1, 1 to 3, 3 to 12, or 12 plus? And we're going to review those answers, and we know that it's important. The exact amount isn't necessarily as important as you might think. It really, first of all, what can you do? If you can only get yourself to 1 or 2 months worth of an emergency fund right now, that's okay. It's a progress that you're trying to move up towards. And if you have a dual income household, you might need less of an emergency fund. If you are a single parent, relying on a job that's maybe a little bit more volatile in terms of earnings, you probably want to try to build up a bigger emergency fund. So most people are in that 1 to 3 months camp. A couple, the other half are between 3 and 12 plus months. So Creighton's going to talk now about some of the various ways we can protect ourselves financially.
Yeah, and I think why this is so important, right? When we look at Americans as a whole, to think that over a third of red-blooded Americans, just like all of us and everyone on this call, right, or just people in general, wouldn't be able to cover an unexpected $400 expense without using a credit card or borrowing the money from somewhere. That's using a credit card isn't always, actually, I don't think it's ever the best emergency fund, right? Unless you have planned to pay it off right away. But I think, as Justin alluded to, and as we've talked about, the key to have in an emergency fund when you go through and you track all of your expenses, if you can have about 6 months of your fixed expenses set aside in case of an emergency, that's usually a really great place to start. Now, as you already alluded to, it's going to change depending on where you're at, what your situation looks like. But again, this is just more general advice without getting anything too specific. And then I think, when you have more cash than that, right, it starts to get a little inefficient. But, if you're a business owner or what have you, as long as you can access those monies easily and they're not going to go backwards, I think that's relevant and important. Now, one thing that I see doesn't get talked about a whole lot is, when you have an emergency fund, you're protecting against the unexpected or a job loss. But most people we see, they typically won't have anything, either any long-term disability or income protection. And, as far as what the statistics tell us, about 25% of people will be sick or injured at some point for at least 2 weeks. Now, most group coverage does cover about 60% of your income. A lot of times when you review these plans for various different clients, they're not including any bonuses or commissions, depending on what your structure is. So one thing I would recommend doing is just taking a look at your, it's in your plan summary, and just see what it covers, or even ask your HR person, how much of your income is covered. Are you paying taxes on it, or is your employer taking a tax deduction? Because that would matter too, as far as when the money's paid out in a claim. If your employer's taking a, deducting the monies, then, it would be 60% of your gross income that would then be taxable. If you're paying the taxes on the monies, you'd receive 60% with no tax. So I think that's a subtle distinction. And then speaking of protecting your income, I think one thing that's incredibly important is if you weren't here, to pay the bills, making sure you have the right amount of life insurance. There's a simple equation we usually go through with clients to figure out how much is enough, right? Because we don't want to have too much or not enough. So typically there's 4 common themes that we'll see. Number one is, any debts or mortgages, that you have, making sure those would be covered. Any final expenses, an emergency fund or readjustment fund to allow the time to grieve. Any legacy that you want to leave behind, whether it be, giving to the Arizona Foundation for Women. Just kidding. They didn't pay me to say that, I promise. But, giving or, providing for college, if you will. And then finally, making sure that you have enough to replace income for as long as, you would want your spouse or loved ones to, continue to be supported from you. So And then basically taking what you have on the other side of the balance sheet, your current assets, and subtracting that by that total number. So you can really figure out how much should you need. We prefer that than just taking a multiple of income. But I think once you've protected, once you've really made sure you're tracking your expenses and you're automating your savings, I think it's incredibly important to make sure that you can bless others as well. So pass back to you, Justin.
Yeah, and that's our fifth and final fundamental is giving. And again, this can be with your time, your money. I want to talk briefly about using your tax dollars for giving as well, or some combination of those. So this is our last poll question. What do you do to give back to the causes that you care about? Again, we can donate our time and money, all of the above. So let's go ahead and select those. And then I think a program that's available to all of us Arizona residents is the Arizona Qualified Charitable Organization Tax Credit and the Arizona Qualified Foster Care Organization Tax Credit. Those allow each taxpayer to basically direct or redirect $500 and $400 respectively for each program of their own tax dollars and say, I don't want it to go to the Arizona Department of Revenue. I want those tax dollars instead to go to an organization like Live and Learn or another qualified charitable organization. So I think that's a really, really powerful way that even if maybe money is tight, you can still support charitable causes by using that great state tax credit program. So if you want to learn more about that, talk to your tax preparer. I also have a blog on my website that details exactly where you can find the charitable organizations, how you can find the forms, et cetera, et cetera. So I'm happy to share that with you as well. So the last poll results are, we have people kind of going with the combination approach to charitable giving, which is great, donating your time and your money. So, to wrap it all up, we reviewed 5 key areas that are really, the fundamentals that you need to cover: saving, spending, growing, protecting, and giving. And Creighton, I'll hand it over to you. But again, I want to emphasize everybody, just start small, start simple, take the smallest step that you can towards the place you want to go. Your path to financial wellness is an ongoing, never-ending journey, but each little step that you can make is getting you closer to that destination. So don't be afraid to start small.
Yeah, and according to the poll answers, it looks like a lot of our audience is doing great at that. We really wanted to break up these 5 areas because I think it's important to note. I think as humans, we start to silo off each area, but as we're talking through each of these, they're all interconnected, right? Because if you're overspending, you're not saving enough, then you're not, growing the money that you have, and so on and so forth. So, I think now would be a really good time just to open it up for any of the questions that were asked throughout the presentation, and certainly appreciate the opportunity to speak, and share the stage with Justin here too. So pass it back to you, Jen.
Thank you both. Yes, I can definitely see myself in these and those things that I thought it was interesting. You touched on the kind of annual expenses. I just had one for my car. So just as you said, it's like almost $400. That's a chunk of change if you're not prepared for it. I didn't see anything except somebody did wonder if the slides will be available, and they will be. There's my companion in the back, my assistant. I didn't have any other questions. Is there anything else you wanted to add? I think the savings page was pretty detailed, so it's interesting to think about savings in different ways, like what can be liquid for me as opposed to what can I invest versus what can I put my money in that my employer is also contributing to. And so those are different kind of strategies, and it's sort of a lot to think about, and glad to know you guys are available to, you know, work through it with those on the call that need help doing that. So I will give folks their evenings back. Want to thank both of you again. Want to also thank National Bank of Arizona for their sponsorship. Honey Bear agrees. And maybe the world of Zoom is slowly coming to an end. I look forward to eventually meeting with all of you in person. But for now, we're going to keep it live from our bedrooms. Thank you all, and have a very nice evening.
Take care.